Welcome to the Invest Like a Boss podcast.
I'm Sam Marks.
And I'm Johnny FD. We're self-made entrepreneurs who invest our own money and use modern technology to invest like a boss.
Join us each week for exclusive interviews with our network of modern investors, business owners, and multimillionaires to discover new ways to invest our hard-earned cash.
Hey guys, it's Johnny and welcome to episode 85 of the Invest Like a Boss podcast. I'm here in Chiang Mai, Thailand, and Sam is back in the good old USA, Tampa, Florida.
It's never felt so good. It's good to be back. Johnny, you sound crystal clear, hopefully. I sound good. I got a new mic set up to bring in the new year, and I am feeling great in the USA. I never thought I'd say it as much as I've dogged the USA over the last several years living abroad. It really feels like it's stepping up the game, and I feel great to be back.
Yeah. So this is the first time that your internet's been not choppy for the last couple of weeks. I'm happy with Chiang Mai because to me, it's a lot of the same kind of features of stability, having a nice apartment, having things just kind of work. Unlike Brazil, we just got back from where things like electricity or internet are not as stable.
Mm-hmm. Yeah. Well, there's a lot of things not stable there. But I'll tell you what, I did warm up to it for any of the listeners that are curious of going. Carnival, we'll talk more about this on our Q1 updates coming up, but Carnival is a incredibly impressive event. Definitely the world's most impressive parade anywhere in the world. It's incredible. Dangerous, yes. All countries have problems. I warmed up to a little bit. I'm glad I went, but it's refreshing to be back to the US and to a little bit more of a stable environment.
I like it, and it's nice to talk to you on video again because we actually have the bandwidth to do so, and especially because, I mean, it's been a while since we really caught up in person. So this is really nice. And actually, next week I'm going to be going to Nepal for a month, so I don't know how good my internet's going to be when I'm there.
Wow, I'm excited to hear more about that, man. And I'll tell you what, since we last talked, it seems like every time we talk since the previous week, there's been a wild ride in the world of cryptocurrencies. And when I was in Brazil, there was this massive downturn sell-off. I'll tell you what, Johnny, when it was going down, you really questioned, what are you holding? What am I holding? What are these things that I'm holding? So it's a big gut check. And unfortunately, I had to sell one Bitcoin at the bottom because I ran out of US cash, embarrassingly, in my US bank accounts. But listen, no matter what your views are on cryptocurrencies, we're going to talk about it on this episode with Gregersen of Silver Bullion, who's got a great new product coming out with crypto security. No matter what your views are of cryptocurrencies as they stand today, the future is going to hold crypto assets. Certain assets are going to be tokenized. There's going to be cryptocurrencies for sure, whether they're here today or there's going to be new ones tomorrow. They will be a thing of the future, and it's important that people know how to secure these things and how to hold them so they don't make mistakes like we've all seen in the past.
Yeah, so I'm excited because honestly, it's been confusing. I think one of the big reasons why people don't even start investing in Bitcoin or cryptocurrencies is because they're afraid of all the steps it takes to, store it. Are you going to use an online wallet, a software wallet, a hardware wallet, a cold wallet? And it's confusing to people where people just don't get started at all. So, especially maybe after this episode, after we kind of dive in deep with all the different solutions, let's talk about what we personally use for our storage solutions at the end of the episode and what we would recommend to people who are either just getting started or have X amount in some kind of crypto.
I love it. So if any of the listeners who have been following us for a while, we've covered cryptocurrencies as an asset class, as currencies, how to buy them, and previously even how to store them. So now we're going to dive in deep into the next level of Storium with a great product that Gregor is coming out with. We've had Gregor on in the past. We're going to talk at what I would call a next generation type of security for these things, almost an institutional level style security for crypto assets. And let's dive into it deep. And then, Johnny, let's jump back on afterwards and let's talk about what we're currently doing with our cryptocurrencies, how we're holding them, and recommendations for the listeners.
Yeah, definitely. And if you guys want to see the video that kind of sparked this whole, interest, go to Invest Like a Boss episode 85, and there's going to be an embedded video in the show notes showing the actual safe house, the vault, where they're storing, they're going to be storing the Bitcoin, and it's literally a Fort Knox looking bank vault with gold and silver. It's really cool. So here we go. Let's take a listen to this episode.
Welcome back, Gregor. It's been about a year since we caught up, and it's a pleasure to have you back on the show.
Great to be here.
A lot of changes in the world since we last chatted about the Safe House and about what you're doing at Silver Bullion in Singapore. And since then, the rise of cryptos is on everyone's mind. So we're going to discuss a lot of things about cryptos, and especially security and why it's important to store these things securely, because I know a lot of people have lost coins, including myself. How about you, Gregor? Have you lost any coins or know anyone that has?
I haven't lost any coins yet. I was to the party a little bit late. I only bought back in October of last year. So I guess I haven't had a lot of time to lose coins yet.
That's a good thing. I've heard some ridiculous stat that I don't know if it's been quantified yet, but it says that 1 in 4 coins currently mined are eventually lost. And if that's true or even partially true, that's a really scary statistic.
Yes, there was a study being done that 2.7 to 3.7 million Bitcoins have likely been lost. And they did that doing an analysis of the blockchain and with a few assumptions and so on. Plus, there's been at least 1 million Bitcoins or more which have been stolen. The 850,000 Bitcoin heist from Mt. Gox and some other ones. So I think it's fairly accurate to say that 1 in 4 Bitcoins have been lost or stolen. So about 16.7 million out there, and 4 to 4.5 million probably have been lost.
I infamously lost coins in Mt. Gox, and I mentioned this on a previous episode that Mt. Gox recently released a bankruptcy paper to anyone who had filed a claim. They released this bankruptcy paper that showed everybody else who had also filed a claim. I thought that was unusual and a little bit too transparent, because you literally see a ledger of every single person's name plus how many coins that they lost. And I was shocked to see how many people lost coins in there and the quantity of coins that were lost. And I think that really brings it home when you see that list, because, we hear about these hacks happening here. You hear about the odd person that's, threw their computer away in a dumpster and lost 1 million Bitcoins. But until you actually see that or experience it, you don't really realize how easy and just how many coins are being lost and stolen almost regularly, almost every single day. So we're going to talk about the Safe House. You guys have an awesome new product out that I think is incredible, and we're going to share a link to this video that you guys have put together describing it. It's definitely next level, state of the art, and it's going to be the future of storage for a lot of people, and certainly a lot of institutions and governments. And I wanted to first kind of build up into the episode just with what you're seeing on the other side of your business, which is, of course, silver, gold storage, and demand for silver and gold, and how that might be being affected by cryptos at this moment.
Well, I think precious metals have been influenced quite a lot by cryptos this year, or last year actually, 2017, because we sort of found that the crypto buyer also oftentimes tends to be a precious metal buyer, or at least their mentality is quite close. So a lot of precious metal people sort of started moving into crypto. And I think that's one of the reasons why early 2017, gold and silver really weren't in that much demand. But we are now seeing a reversal of that. And I think the reason we are seeing a reversal is because people made so much money with crypto. I mean, you look at Ripple, if I understand, 36,000% up last year, that these people are coming back, taking some of those gains and going back into gold or silver. And it makes a lot of sense for these people to do it, take some of the gains off the table and put it in something, basically it's very stable and a good value. Last month, basically we had our third best year. So for the year overall, it was quite slow. And then starting November, December, things really started heating up.
That's really interesting. So it makes a lot of sense what you said about the reversal. And I had kind of my own assumptions that might be happening simply because I know a lot of people that have taken crypto gains and not necessarily put it in gold, silver, but put it in other assets like, startups, their own private equity, their own business or a real estate of such. And I think that's happening a lot now just from what I hear, but often I think that's a clue into what might be going on in the broader market. So That's really interesting. And has gold and silver demand been consistent as it has historically been with you guys, or has there been any type of shift there as well?
Well, in our business in Bullion, you don't really have much of a seasonal demand. It very much seems to vary year from year. So it always seems to be that everybody's calling each other to say, today we're going to buy gold or today we're not going to buy any gold. But essentially, I believe that the increase in cryptocurrencies and the large amount of gains is causing some of the crypto money to come back. And, the beauty is there are all these people which might have invested $1,000 or $10,000 and now they're sitting on 10 million. So why not take $500,000 and go back in gold with it? So overall, I think for the bullion industry, this is a great sort of development because you suddenly have people which are much more likely to buy gold or silver, be a lot richer. And, as some of that money is flowing back, I think it's going to be very good for physical bullion.
Now, do you guys get any demographic information as your buyers and who's using storage at Silver Bullion?
Yeah, actually, in our case, I would say that almost half of our clients are US-based, quite a lot of Europeans, Australians, and so on. And I would say 90% of the customers actually store with us. So some of the customers use a peer-to-peer system to basically lend to each other. So, yeah, I would say mostly Westerners and mostly people who actually store with us.
And do you get age information?
Yes, we do. The age of our customers tend to be between 30 to around 60 years. So that kind of seems to be the sweet spot. So it's fairly evenly distributed.
So a lot of people have been saying that, cryptocurrencies is the new gold for millennials, that the older generation loved gold and silver, and now the new generation loves cryptocurrencies, and they see cryptocurrencies as an alternative to buying gold and silver. Do you think that, do you see that from the demographic data and the people that are buying and storing with you guys at Silver Bullion?
Yes, but I see them more complementary than competing to each other, because if you want to have all of your money in crypto, I would argue that it makes sense to take some of that money, some portion of that, and put it in something like physical gold or silver or a home or something else. So it always makes sense, to put a little bit of your nest egg in different baskets. And in that sense, I sort of see them as being complementary. Plus, I would say that a crypto buyer is much more likely to buy gold or silver than, say, somebody who spends their whole life in the stock market and buying stocks. So in that sense, I would also long term see the rise of cryptocurrency as being very positive for physical bullion.
Right. Love it. Okay, so we're going to talk a little bit about security building up to your guys' new product. And I really just got my head around this stuff kind of the last couple weeks. Over New Year's, somebody sent me a hardware wallet when he found out that I was just keeping all of my money in a web wallet. And I never really wanted to get into this stuff because after I lost money in Mt. Gox, I moved everything into kind of a web wallet off one exchange. But then I never wanted to touch it because I was always just scared as hell that I'm going to mess something up. I'm not a super technical guy. And I thought I was just going to lose it. It was a really big, bad stain from Mt. Gox that I still haven't fully gotten over. But when we're talking about the different levels of security currently available to most investors, if you want to call it, or people that hold cryptocurrencies, I would just start with my understanding of them, which is first level, you have the exchange, which is you buy it on exchange, you host it on exchange. That would be super low security, and which is where most of the hacks happen. Then you would have a live web wallet. I guess they call it kind of a live wallet, which would be something that you just go to a web address, you get a wallet, and then you host it there, correct?
Yes. I mean, that's one option, yep.
And then the third would be a software wallet where you actually download the software, host the coins in that wallet. And then the fourth that I know of would be a hardware wallet, something like Trezor. I'm sure there's tons of other ones now as well.
Yes, those are all some options of what you can do. I would say when you store crypto, you sort of have to decide whether you want to store it yourself, meaning that you actually write down the private key somewhere or put in a file and so on, or whether you're using a system which is going to handle also private keys for you. Now, if you go to an exchange, exchanges are not necessarily very risky, but the thing with an exchange is they have two contrasting requirements. They need to provide security, but they also need to enable transactions of Bitcoins, and a lot of transactions. So when you're building a system, you always have to sort of balance at least three different characteristics. Reliability, which means how likely it is for you to actually lose the data, which will be terrible. Security, which is basically to prevent somebody from outside to go in and get your private keys and thereby steal your Bitcoins. And convenience. Convenience, in this case, is defined by the cost of storage, as well as how easily you can make transactions in and out. So there's no system which can do all of these things, because typically if you make something easy, it's also less secure, and vice versa. So exchanges basically have to do trade-offs between security and convenience. Apps on their phones to store Bitcoins or as a crypto. And these apps normally are free and they work pretty well. But the problem is that you're basically trusting that the software will be working fine, that there's no bugs there. And more importantly, these phone apps have a recovery function which utilizes your email. So in my case, for example, I tested it out and I had a phone app wallet, and I tried the recovery function. And basically, just by having access to my email, I was able to recover the wallet. What that basically means is that if you're storing $5 million worth of crypto in your phone app and somebody steals your email credentials, then they can basically go through your email, recover the wallet, and steal your Bitcoin. So that's where the risk is. So whenever something is online, you always have a certain amount of risk. The other option, as you mentioned, is you go into something like Treasury, which are called hardware wallets. Now, hardware wallets basically are like mini computers which try to basically put a barrier to protect your private keys and your crypto. But, of course, if you look more carefully, you will always find some issue. One of the issues with USB sticks, with these Trezors, are that you would normally have to have a backup. Now, the backup typically is a mnemonic phrase. In other words, it's a set of 12 words or so, and you have to write it down or otherwise store it somehow. And anybody who can get a hold of these mnemonic phrases can basically recover your wallet if they buy a similar wallet. And once they recover your wallet, they can transfer your Bitcoins out. So again, you are basically facing this compromise between reliability, convenience, and security. So if you use this, you just need to make sure that you don't put your mnemonic phrases in a bad spot. And you have to make sure you keep it, because if you lose it, and then if your USB stick basically happens to malfunction, or you lose it, then you might just lose all of your Bitcoins. And I think most of the people which have lost the Bitcoins actually didn't get hacked. I think most of them actually lost it. And by throwing away the wrong piece of equipment, the wrong laptop, or the wrong USB stick. So these are the various options for you to store things. You can also do what's called a paper wallet, in which case you just write down your actual private key. You put it somewhere safe. You maybe make a copy or two and you put it somewhere else safe. And if you ever need to access your crypto, you just get back that piece of paper. So, and the problem with storing in a piece of paper is, what if the ink starts running? Maybe it's very humid and suddenly you can no longer read what you wrote down, and suddenly your $2 million worth of Bitcoin are gone. So as you go through all of these sort of issues, you sort of have to look at, what's my risk of loss? What's my risk of somebody else stealing it?
So, growing up as a kid, grew up in a neighborhood. We had a couple break-ins to our house growing up, and my dad had, a safe, and we always thought that might be like risk for someone to come in and try to rob us. So let's take a look at like the future of home invasion and home burglary in an extreme example. If cryptocurrencies become super, super mainstream, which they're on the way of becoming, and in the future, people know that people have millions of dollars worth of cryptocurrencies, if you have these 4 different levels of security: exchange, web wallet, software wallet, hardware wallet. Are all of those, like, if someone comes in and puts a gun to your head, they know you have, multi-million dollars worth of cryptocurrencies. In pretty much all of those, they can get that, get you to transfer your cryptocurrencies to them kind of on the fly, couldn't they? Like, pretty much all those different tiers of security.
Yes, I suppose so, for the most part. I guess the issue is if you have a bank account, you've got $5 million in your bank account, and somebody puts a gun to your head and asks you to use your token to transfer $5 million to them, then we'll probably end up doing it as well. So I guess sometimes the best thing is not to let people know, so you have $5 million worth of cash.
Yeah, right.
Yeah.
I know it's an extreme example, but I've just, there's so many new millionaires out there in cryptocurrencies that are going around flaunting it all over the internet. And I'm like, that's kind of a stupid thing to do, because, at least with a bank, a lot of times you have to, they're going to call you the next day and verify it, or they're going to have a limit on it, or you have to do some type of double authentication, like you said with that token. But a lot of times, if these people just have it on an exchange or a web or software wallet, I mean, it's pretty easy to transfer it. I don't know if there's any recovery in that sense, but fortunately, we haven't heard of that stuff happening now. But you have all these conferences going on around the world. I'm going to one in Miami next week, and people are just going to be talking about how much money they made, and maybe to the wrong person at some point. So I guess the point is, like you said, just don't flaunt it, and certainly don't let people know where you're keeping it as well.
Yeah, the thing about cryptocurrency, one of the strengths, I guess, is that you cannot reverse a transaction. So, and if you lose your private key, it's gone forever. There's no recovery method with a blockchain. And that's essentially because there's no central authority you can go to and say, hey, I lost this, why don't you give it back to me? That's also why it's decentralized, and why it's, once you make a transaction, there's basically no way back. So the system is great. I like it a lot, but it forces you to it's a black and white system. You either know your private key or you don't know it. And if you don't know it, then you lost your Bitcoin.
Right. And to your point, if you send it to the wrong address, or in this extreme scenario, you're forced to send it to somebody against your will, there is no way to get it back. Once it's done, right?
Pretty much, yes. Now, we are currently in the process of negotiating with insurance companies to get insurance for the Bitcoin we are storing. And talking with some of them, they would actually be able to cover the rest, as far as I understand. We don't have it in writing yet, but if somebody puts a gun to your head and you're forced to transfer something, then we might actually be able to get the value back from the insurance, but you would not be able to get it from the cryptocurrency itself.
So I think originally I was talking to Vincent on your team, and I got my first sneak peek at the new product of the Safe House, which is your cryptocurrency storage. Now, is this launched yet, or is this being created at the moment?
It's not quite launched yet. We are sort of fine-tuning the last dots, and it always seems to take longer than I thought at first. But I think it's important to launch it when ready and not a moment before. But essentially, it should be ready within 3 to 4 weeks.
Wow. So first time I looked at this video, I've watched it a few times now because I think it's really, really intriguing. I was originally thinking this looks like a video that was produced by Fort Knox. I mean, the level of detail that you guys have put into this and what you have thought through is really incredible. So many things I've never thought through when it comes to crypto security. And I have to imagine that this is going to be very appealing to, especially, institutions, people that are holding a lot more cryptocurrency than the typical person. But take us into a little bit. Of course, we're going to leave the video in the show notes for the listeners, but take us into how this was created, why you guys set it up, and what everyone can expect out of it.
Well, I think first of all, I sort of realized by the middle. Well, we already allowed people to buy and sell gold and silver using Bitcoin for around 2 years now. But it was earlier this year that I realized that crypto is here to stay, and it's something that we should really look into as far as how we can secure it. And what I think really gave us the impetus to concentrate on this 100% was when an elderly customer of ours basically asked to sell a lot of his bullion, go into Bitcoin in that case, and we enabled that. And when we asked him, okay, where do you want us to send it, to which address, he wasn't sure what an address was. He didn't have a wallet or anything like this, and he's definitely not a computer savvy person. So we sort of realized, there's definitely a need for a safe web currency for people who might not be as familiar with hardware wallets and all the other options that are out there. And while we're at it, because our company basically focuses on how to secure wealth and looking at it in a very comprehensive manner, we thought we might as well analyze how to store something safely and build what I'm hoping to be the safest storage system out there. And essentially, if you would like, I can go through the 6 features, that I would say more or less define our storage system.
Yeah, we would love that. And also, just going back, just a quick question on what you said earlier. So you're seeing people that wanted to move, that wanted to pay for silver and gold through cryptocurrencies. Was that like that scenario where the guy actually asked you to facilitate that trade on their behalf?
Yes, that was something we started fairly early on. Because it seemed like a natural sort of thing that if somebody has cryptocurrencies and he wants to go into physical gold and silver, we often had scenarios in the past where people would say, okay, if there's a gold nationalization in the US or if there's a major financial crisis and the banks don't transfer money, or if there's other sort of capital controls, and I have my gold in Singapore and I want to sell it, how do I ever get my money? And when cryptocurrency came around, we kind of said, well, here's one more way to sort of answer that question. So that's why early on we sort of said, okay, let's figure out a way of accepting Bitcoin, both for sale and sell back of gold or silver. And yeah, that's pretty much how the Bitcoin liquidity portion for us started.
Very cool. Okay, cool. Thanks for going back on that. All right, let's talk about the 6 features that you mentioned with the new product.
Okay. Well, I would say the first things that people are worried about when they think about cryptocurrency storage is that somebody might come in and basically hack the system. Some outside, intruder who gets the private keys and basically what happened to Mt. Gox. So when you read about Bitcoin storage or crypto storage, you oftentimes hear that term cold storage. Now, cold storage more or less means that the Bitcoins or the private key is stored on or to other networks. And because it's not connected, it's harder for somebody to get and steal these Bitcoins. But the problem is that that's a generic term and people never really specify how it is ensured that the system is offline. So in our case, we looked at it and we said, well, we can go a step beyond it. We can generate a private key and an address on an offline system, but we immediately encrypt it and then we basically materialize it on a piece of plastic card with a laser. And by doing that, or after doing this, we completely delete any trace of the private key on the offline systems. And that basically means that we are no longer digitally storing any private keys. It's essentially, what a paper wallet will be. And to sum it up, it basically means that if you don't store it digitally, it cannot be stolen digitally, meaning it cannot be hacked. So that's the first part of the system. And because we operate a 600-ton vault and we have all these safe deposit boxes, it was very easy for us to then store the physical cards. The next problem is when you store something physically, a private key and so on, you have the problem that anybody who can see it can also steal it. In other words, if you take your private key as a QR code and you just write it on a card and then you put it in some box, then anybody who handles that card, if he takes a photo of it, he could then have your private key and steal your coins. So the way that is addressed is that we immediately encrypt the private key in memory. It never gets stored digitally. in memory gets encrypted, and then using UV laser it gets etched on these plastic cards. So anybody stealing these cards basically will have no use for it, because the encryption is actually the same type of encryption that Bitcoin itself uses. So it's pretty much useless unless you have a way of decrypting it. So feature is going more into the reliability realm, which is how do you ensure that if you are writing these encrypted codes down, that 10 years from now, these things are still legible, or 20 years from now, or 30 years. So and if you look into it, a bit more carefully, you'll find that oftentimes ink is what ends up running, or what is going to get you into problems. And paper, of course, is not the safest way of storing something long-term either. So we basically said, okay, we'll get a ultraviolet laser and polycarbonate plastic cards. And that combination basically produces a physical card, plastic card, which will last for a very, very long time, especially because we are then taking these cards and we put it inside what we call a mini box, which is a numbered box, which itself is being sealed with a metal seal. And that box then goes in a safe deposit box. So we can store this data for 70, 80, 90 years reliably. And by doing this, we basically address the decay issue of storing private keys. And then, of course, your system might be great and perfect and so on, but you never know if you have some sort of catastrophe or something happens, and somehow that card might get lost anyway. And being Bitcoin, if you lose your private key, your Bitcoins are basically irretrievable. So what we are doing is we generate two cards. One is a customer card, one is a recovery card. So using different types of encryptions for different purposes and so on. But essentially, from one card, we can recreate another card. And that basically gives us redundancy. If we have some sort of plane or something crash into our vault and ends up burning down all the cards in our vault, we do have a backup location where we keep the recovery cards. And from the recovery cards, we can recreate the cards which have been destroyed. Now, the recovery cards are not a security risk because them themselves are encrypted and there's no good way of decrypting them. So that's the redundancy aspect. And lastly, a major problem when you're storing something is customer impersonation or identity theft. So I mentioned it earlier when I was explaining about email recovery and so on online wallets, where if somebody gets a hold of your email credentials, they can pretend to be you and recover a wallet. So in a sense, it doesn't matter how good our system is. If we rely on, say, email, our system will only be as good as somebody taking care of their username and password. So what we did instead is we require, when there's a withdrawal, to have a video conference with the customer. And because we have the customer's password, we can basically identify him. We can call him up and we can see him picking up the phone over the video conference. But that video conference essentially is the best way we found to ensure that the person calling is indeed the customer, to confirm the transaction. And the added benefit is that if somebody is trying to impersonate the customer, it is very unlikely that they want to show their face on a video conference. So that's another aspect which is sort of key. And lastly, it is very difficult right now to get insurance on cryptocurrencies because insurance companies basically have a very hard time to understand what sort of risk there is of somebody storing their Bitcoins on a computer. In our case, because we are not storing it on a computer and because we've been running this vault for quite some time without any problems, the insurance companies are actually interested in talking with us, are interested to understand our system, and we've pretty much been told that they're willing to do insurance on it. Now, I've actually been arguing that it's safer for us to store cryptocurrency than it is to store gold, because if somebody manages to get into the gold and run away with some gold, the gold is gone. But if somebody ends up stealing one of these customer cards, they can't do anything with it. because they're encrypted, and we can recover it from our recovery card. So in that sense, I was trying to argue that it's actually there should be a lower premium for cryptos than it is for gold, but that argument doesn't seem to hold sway with them. Yeah, theoretically. Now, in practice, I think we're looking at 10 to 15 times higher insurance premiums on crypto than on bullion. And that's just because we are amongst the first who are being considered for crypto insurance, because these insurance companies don't have a history of claims and so on. So they don't have a good way of really evaluating what the risk is. And so they're looking at looking at high premiums. But the way we can sort of handle that is we make it optional. If a customer feels that they want to get third-party insurance, and they're free to take it. If they're not and feels they don't need it and it's not worth their money, so then they don't have to.
One thing that you guys did that I didn't even know about until we talked last time, on regards to the Safe House and Silver Bullion, was that you introduced a peer-to-peer lending platform against people's bullion, which I thought was super innovative. And I know actually some of our listeners are actually using and utilizing that practice. And it looks like you're going to roll that out for Bitcoin as well, correct?
Yes, because as you mentioned, we've been running it for around 2 years now. We had around 1,900 contracts being made. So on average, we're having 3 or 4 contracts per day. But we are limited in the amount of borrowers. We built the system to be very safe by requiring 200% worth of collateral and having some other safety measurements in there. So we're in a situation where we have too many willing lenders and we don't have enough borrowers. And by introducing cryptocurrency as a collateral type so you can borrow against, we basically expect a lot more borrowers to be interested in doing this and get a lot more liquidity on the system. That
makes sense. So I would imagine the reason for that is because a lot of people storing gold with you have a lot of wealth already. They're putting their gold in a very secure place. A lot of the people and so they don't actually need to borrow a lot of money. But with the Bitcoin, you have a lot of new wealth, a lot of flash wealth that people might have that, but they might also not be liquid for other forms of currency, so they might want to borrow against it.
Yes, that's one option. And right now, there are not many ways to borrow against cryptocurrency. So being one of the few options to do that, I think will be very interesting for the market. And I think we're going to get goodwill from the crypto community for doing that. And it's not a new system. We've been running for 2 years, so we have a history. It's a mature system and so on. We just need to add cryptocurrency as an asset against which you can collateralize. One difference, though, is that gold and silver tends to be a lot more stable from a volatility point of view compared to Bitcoin. So
that's an understatement.
So, right. So 200% collateral might not be enough if somebody is borrowing for a year. So what we're considering doing instead is to basically change the system a little bit for cryptocurrencies and just let the lenders basically take delivery of the collateral if the borrower will end up defaulting on the loan. Now, that's a little bit different on the way we do it with gold and silver, because with gold and silver, we actually liquidate the bullion if it goes down to 110% of the principal. But with cryptocurrencies, Bitcoin fell 40% within, in about a day or something like this. So it's so volatile, and the liquidity isn't really there for Bitcoin or other cryptocurrencies in the way it is there for gold and silver. So in this case, what we will probably do is let lenders decide, make sure lenders understand the risk, and then offer, whichever interest rates they're willing to take. So for gold, we're looking around 3.5% interest rates that are being asked for per year. For cryptocurrency, it's probably going to be higher. But our system is basically set up so that borrowers and lenders decide amongst themselves with a bid and ask system what the interest rate is. So the system will sort of adjust itself and will just kind of need to make sure everybody understands what the risk is or what the risk is not, and then it's up to the lender to decide how much collateral he wants or how much interest he's willing to take.
Now, if a person wants to start using this new product with you guys, they don't need to come to Singapore to get it all set up, or do they?
Oh, no. You can do everything remotely. You will basically just create an account online. You will then apply for our storage system, Star Storage. And once the system is ready, we are going to add the option of storing Bitcoin. At first, we'll be looking at expanding it probably into Ethereum and a few other currencies at a later stage. And there wouldn't be any cost to it. So you can make an account. You can say you also want to have the cryptocurrency account. And in that case, we'll be creating an account for you. We'll create the card, we'll put it on storage for you, and so on. And then you would have an address, and you can just transfer Bitcoins into that address.
And what level of wealth do you think this is going to appeal to in terms of cryptocurrency assets? Is it for the person that has $1,000 in cryptocurrencies? Certainly the higher tiers, but where do you think that kind of the minimum threshold will be?
Well, one thing to understand about our system is coming back to the convenience versus security. Now, because the system is it's very secure, it is not that convenient. So if you are a person who wants to send out a lot of payments, we are probably not the right choice, because whenever money is going out, we basically have to send vault operators to the safe deposit box, get out that bar, end up making a video conference call, and so on. So it's quite inconvenient in some way. So the target market we are looking at are people which are storing large amounts of crypto for a long period of time. Now, a lot of people might just be transferring, I don't know, a couple $1,000 or so to kind of see how it works. And then they might be adding more. But we will have to charge a withdrawal fee. Right now I'm looking at maybe $100 or so whenever you do a withdrawal. And if you have a fee like this, it doesn't make sense to put a small amount of crypto in. So you probably want to have a larger amount. But having said that, putting money into the system is very easy, because you just transfer funds to the address. It's when you take it out where we have to make sure that the customer is indeed the customer and go through all these processes to wire some money out.
Right. It's super innovative. I highly recommend all the listeners take a look at the video, because I think the video really brings it to life with visuals of the encoding machines that they have and how this stuff's set up, the levels of security, that this is actually locked in a vault, that is locked in a vault, that is locked in a vault. So it's really impressive. And every time I see visuals of what you guys have set up over there in Singapore, it's really, really incredible. And this is just the latest innovation, which I think is really cool to see, because, going from one market into the next and being able to, to create a product around this new category of assets is really cool. So Gregor, awesome having you back on to catch up. We'll share the links to all this stuff in the show notes, and good luck with this stuff. Let us know when it launches and we'll put out some more material on it.
Great. Thank you very much for having me.